Well, there we have it, the inflation rate rising to 10.5% year on year in October. And it now seems to be that double-digit territory is proving to be pretty sticky in Nigeria.
Yeah, well, I think the fact that it's in double digits is not really a surprise. What was a surprise was when it dipped into the single digits, and at the time, the central bank said that it could well rise again towards 10.5%. So I don't think this is necessarily a sign that it's going to be a lot higher from here. I think between now and December, 10 to 10.5 is probably a reasonable range, and then what happens in 2012 will depend largely on the outcome of this debate around the removal of fuel subsidies.
Of course, that debate's still being had, and it's a factor that could well contribute moving forward to the inflationary scenario. Before we get to that, let's take a look at current factors at play, because we've got food inflation ticking higher slightly to 9.7% from 9.5%. Food prices at this time of the year often tends to ease off, with it being the main harvest season, though. So what's your reading of this as an influencing factor?
Yeah, it is a little bit peculiar. I agree with you. Normally, you see inflation decline at this time of year precisely because of the harvest. I think what happened is the harvest probably started a little bit early, which is the reason why in the months of July and August we had unusually low inflation readings, and I think we're giving some of that back right now. So that's the reason why inflation isn't falling as it normally does in the final months of the year. But I think if you were to look at month-on-month inflation, you'd still find that it's fairly low, probably around 0.2 to 0.3%, which is not too high for Nigeria.
Well, that's the scenario on that end, and possibly things should be tapering off moving forward. I mean, the naira still provides some contention for this inflationary scenario. We've got to take that into consideration, because at 150 naira to the dollar, it's certainly being viewed as overvalued, and there's some conversation being had around some need for devaluation on the currency front.
Yeah, that's correct. I think the latest that we've heard from the central bank is that it's thinking about adjusting the band, and that it would be willing to tolerate a rate of 155 to 156 naira per dollar, which is a move from 150. Our own view is that, yes, the central bank is looking very closely at what's happening in the interbank market for dollars, and it's going to take its cues from there, and based on that, it will probably let the official rate weaken towards 155, 156 initially. And then beyond that, we'll see how it goes. But our view is that it could well fall to about 170.
The inflationary risk then, Alan, that presents?
It's not exactly clear that would cause inflation to pick up. That's certainly the conventional wisdom. But if you look at what happened following the devaluation at the end of 2008, it wasn't clear that inflation really took off after that. I think it would have an impact, but I think the bigger factor for inflation over the next 6 months is definitely what goes on with the fuel subsidy. Because if the currency moves, it's likely to move in small amounts at a time.
So let's hone in on that issue of fuel subsidies and the implications of those fuel subsidies being removed at the start of next year, because there's wide-ranging debate. Some saying that it may well see that inflation rate hit 15%, while others say that they don't see it having much impact.
Yeah, you're quite right. Opinions are very divided on what the impact will be. Our personal view is that it won't be that strong, that perhaps inflation will rise to 12 or 13% this year, in 2012. And the reason for that is that the removal of fuel subsidies is probably already being anticipated by certain retailers. So in much the same way as a VAT hike will be anticipated and retailers will raise their prices gradually long before the actual hike is implemented, we think the same thing will happen with the fuel subsidy. So we don't think that there'll be a big one-off shock to inflation, but on the other hand, we don't believe that there'll be no impact at all.
Yep. Let's take a look at the overall growth scenario in Nigeria, Alan, because we've seen that GDP number for the third quarter come in lower. 7.4% is what it's hit on a year-on-year basis versus the 7.72% that we saw in the second quarter. That's still quite strong growth that we're seeing, despite the kind of tapering back that's come through today.
Yeah, I think you're right to say that that's fairly strong growth for Nigeria. I don't really read too much into the growth figures unless there's a huge deviation from trend. So I think 7.4% is about where most people were expecting So there's definitely no surprise there. I wouldn't read too much into the fact that it's fallen from 7.72 in the second quarter.
So where you have that being the growth scenario and then the inflation scenario, on the other hand, we've seen the CBN say that it would prefer single-digit inflation moving forward. We've got the MPC meeting next week to set rates. What are your broad expectations there?
I think having raised it by 275 basis points in October, it's likely that it will be a hold in November. I think the factors that it's considering are the exchange rate. So if the exchange rate blows out between now and next week, obviously it will be forced to act. So I think that's the single most important variable for the Central Bank of Nigeria is the exchange rate. So I think that's where it's taking its cues from. So if we have kind of broad stability, I think expectations of a devaluation are more muted than they were at the beginning of October. So with that in mind, I think they'll probably hold in in November, and when it comes to next year, I think depending on what happens with inflation, what happens with the currency, there's a good chance that the rate will be raised again.